today I have Lynette Zang. I'm super honored to have Lynette over here. And I'm even surprised that she would to say yes to be on our show, to talk on the show. So Lynette is, works for founded ITM Trading, which is really focused on facilitating investors to put their hands on precious metals and etc. But she also have many different takes in terms of, inflations, how do we combat do it, and obviously wealth of knowledge on precious metal trading. Thank you for joining our show today, Lynette.
Well, Lisa, I'm very happy to be here. So thank you for having me. And of course, I would say yes if you ask me. Of course, I would. This is about community, and we really do have to help each other. So, yes, I always say yes.
Oh, awesome. Thank you, Lynette. And if you notice, her background is way better than mine over here. And then there's some super awesome traits later on as well. So Lynette, I think we've kind of beat this horse to death in our inner circle conversations, etc. And I've kind of shared the reason also on our blogs and YouTube. But can you just spend a little bit of time going over some of the recent events and why we think now it's now than ever maybe time to diversify your portfolio more into precious metal? Yeah.
Well, it's critical that you do that because I've been studying in my career. I've really been looking at all of these markets on different levels since about 1964, frankly. Mm-hmm. And in 1987, I was a stockbroker at Shearson and I started studying currencies. And what I saw was a pattern, a currency life cycle pattern. So if you stop and think about it, everything has a life cycle. I guarantee you I'm at a different point at my life cycle at 67 than my granddaughter that's 6. And currencies are no different. So the reason why it's critically important to hold real physical gold in your possession and silver as well is because we are now at the end of this fiat money, government-based, debt-based money. We're at the end of the system. Mm-hmm. And the way that you as an individual know that, because Wall Street's not going to tell you that, mm-hmm. but the way that you know that are two key pieces, and they're simple pieces. One of my favorite websites is the FRED, F-R-E-D, which is the Federal Reserve Education Department. Mm-hmm. And if you go in, and we're happy to give you the link too, but if you go into the FRED and you put in purchasing power of the consumer dollar, what you see is out of the original dollar's worth of purchasing power, officially there's 3 cents left. But what you also know, and what everybody's experiencing, is the rapid inflation. Now they can say that it's 8.5%, but when you go to the grocery store, that's a lot more. And since you're all in real estate investing in apartments, you know that the rents are going up more than 8.5%. And, the next thing that may be going up, and you would know this better than me, are property taxes. Mm-hmm. So there are different risks when you invest in real estate that you need to cover. And frankly, the best way to cover it is gold. Because what gold does, and I've done lots of studies on this, real estate runs some risk. If you have debt on it, right, then you've got to be able to pay that mortgage. And anybody that's in real estate has recently experienced the rent moratoriums, the mortgage moratoriums. And these are the kinds of things that happen when we go into the area like we are definitely entering right now. They will put caps on what you can charge, but there won't be any caps on your property taxes, on your insurance, on your maintenance. No caps on those, but caps on what you can charge. Right. So what gold as a diversifier does, because this is good money, and the dollars in this country anyway, but the government money is based on debt, and debt is at nosebleed levels. We know that. And interest rates are rising. So you need the gold to ensure that you can always pay your property taxes, that if there is a loss of income the strategy is gold will recoup that for you. So if you lose it over here because you have caps or people stop paying, you still need the income to cover all of the expenses that it takes when you have a real estate investment. And also for when we go into these periods, like we saw in 2008, that wasn't that long ago, right? And if you got into trouble and you couldn't handle your mortgage, you couldn't continue it for any reason, then they restructured, they reset that mortgage. And if you were part of that, I'm pretty sure you realized that it wasn't really in your best interest. It was in the bank's best interest. So you want to have the ability to, boom, pay that mortgage off in a moment's notice if you need to do so. And that's why it's critically important that you have gold, particularly in your portfolio, to make sure that you are properly diversified. Because if all you hold are dollars, they're destroying the value of the dollar.
Right. Yeah. And then we kind of talk about this in our previous videos too, is what are some of the assets that kind of preserve the wealth, because you're kind of in the mode of almost preserving your purchase power, as you said before, instead of looking at this as an investment like stocks and etc. If it crashes, it's gone, but you don't need to get out of the stock market. It's money that you didn't need to use anyways to start, because that's why it's in the stock market.
Let's kind of think about that a little bit deeper, because if you own stocks, all you can do is sell them for, in this country, dollars. When the dollar loses all confidence, I mean, the only thing that's holding the dollar together at all is that people cannot, which they knew when they created the system, people cannot possibly conceive that the dollar can go away. So even the new currency is still called the dollar, so people don't realize the change. But, really need to have good money that holds its value, and actually, not just that it holds its value, but a rising gold price is an indication of a failing currency, right? Do they want you to realize that the currency is failing? Oh, no. So they suppress the price. So, if you look around at all of the different choices, whether it's stocks or real estate or cryptos or anything, does any of that seem undervalued to you?
No, not usually.
Exactly.
No.
This is the true value. If they were to reset, because this is how they do the ultimate overnight reset is against gold. If they were to do that today, you would see spot gold go to at least $13,500 minimum, because that's its true fundamental value. So the fact that you can buy it around, 1900, it's a bargain.
Yeah. Can you get into a little bit more? Because I know you have lots of knowledge in our previous conversation, etc. I love the when you talked about the history of dollar and then using the gold as an anchor for that. And then how you came up with roughly the estimates of like, hey, how do you know, like, if it's 13,500, okay, Lynette, I can take your word for it. But how do you know? Like, I found it just fascinating in previous discussion we had, you had this like whole history, the backing and all that stuff. So it's not just kind of based off Lynette said so,
No, and it should never be because Lynette said so. It should also not be because anyone else said so.
Right.
That's why in all of my work, I give you all the links. I don't want you to take my word for anything, but I definitely have been a student of currencies and the Depression. And so, when you're on a gold standard and the government wants to tax you, well, you know about it and you might not agree with it. So they started the transition into a pure fiat money. Fiat means by decree, so a government-based money in 1913. And now a 20th of an ounce.
And prior to that, Lynette, that was like your dollar is kind of like if they were trading silver, right? Like, is that how?
Right. The gold and the silver were actually the money that was in circulation. And then they created gold certificates. So it looked, so you could go into any bank with that gold certificate and walk out of that bank with a $20 gold coin if you went in with a $20 bill. And this is a $20 gold coin. It's an ounce of gold, roughly. And so they had to keep it like that. But then they started the transition. So legally, when they installed the Federal Reserve, which is not federal and they hold no reserves, it's not a government agency, it's a private bank. But when they installed them, they then gave them the right to print $2.4 for every dollar's worth of gold that we held in deep storage. And so very quickly, that's exactly what they did. You saw that if you look on the purchasing power graph at the Fed, you'll see that the dollar's purchasing power value dropped 50% because of all that new money that they printed. And then we had the Roaring Twenties. And I'm going to tell you, every single time they want to transition you into a new monetary system, they allow you to make or feel like you're making a lot of money so that you just go along with it. And then once the public started to get involved in the stock market back in the 20s, well, then the credit dried up and we went 1929. And then we had the Depression. But that was the kickoff. So in 33, the citizens could no longer convert this into a $20 bill. They had to take the gold away from the public. They had to, right? And so they confiscated the gold other than this kind of gold, pre-33 coins. So people could have actually continued to accumulate, but they didn't know. They didn't understand the law. The guys that wrote the laws, that's exactly what they did because they knew full well that they were destroying the purchasing power value of the currencies. So that went on, and then in 1971, but governments could still convert dollars into gold. Well, in the 1960s, there was actually a run on the dollar. And so governments around the world were sending in dollars and pulling the gold out of our coffers. And so in 1971, they say Nixon closed the gold window. What he actually did was hand over full control and power to the central banks of inflation. It's really not a good idea since banks basically know debt and interest. But, since then, really since 1913, if you look on the graph, it's constantly downhill. That's the real trend. So they make the stock market go up because what inflation really does is it creates nominal confusion and people get married to numbers, right? So if they make the stock market go up, people go, oh, look at this, I'm making so much money. But then the real trend is in that purchasing power, you're not really making money. You're just kind of treading water. I mean, in a trading environment, maybe when things zoom or what have you for a minute. But that's really about getting you comfortable in that area to make that transition for them very easily. What they did, we heard of the Roaring Twenties, and look we got the Roaring Twenties again 100 years later.
Right.
That's because we're in transition into a whole new social, economic, and financial environment.
Yeah. And then I love, Lynette has showed me this video before. I think it was more of a private source and whatnot, where she was comparing the loaf of bread with the dollar that can purchase. I think it was somewhere around like 50 bread, and now you can only purchase one or something like that, in terms of visually just how fiat money has been devalued in a lot of senses.
So we'll send you that and you can share that with all of your viewers and followers.
That's awesome. Yeah, and it was a really well-made video. I guarantee you there'd be 100% entertainment value out of that too. And yes, I got a kick out of it. But really, visual illustration was really powerful. Now, Lynette, interestingly, so now we're convinced that, hopefully we're convinced, and there's in that video, there's a lot of graphic that Lynette kind of get into a little bit more details, but his history of money, the value of the money, and then the gold, etc. So I think that would be super helpful. Thank you so much for sharing that with us. And so Lynette, now let's kind of talk about a little bit more practical stuff. So a lot of folks who was here because they had the question of like, oh, gold and silver, why should we purchase it? But after the why, the question now becomes how. Because when I first looked into this, my head just grew like twice the size because I'm like, how do you even start purchasing gold? What are like, because when we are talked about financial advisors purchasing stocks or, all that sort of stuff or portfolio like mutual funds, etc. There's mutual fund managers. I mean, that my head grows twice size as well, just to find out the who to trust, right? And then I think there's a whole ecosystem of the precious metal. It's not like precious metal traders that just out there, not like we buy houses guys, like you see them all over the place in the electrical pools. But you're like, nobody's like, we sell gold or something. So how do you actually vet the proper, what do you even call yourself, like the metal traders or what? Like
Well,
how do you vet that? How do
we
you just
are
get started?
well, we are a full service physical gold and silver dealer. And I will say, number one, that's the only way to buy it is physically and in your possession, because the reality is whether you perceive it that way or not, doesn't matter.
Yeah.
But if you don't hold it, you don't own it. And so I believe very, very strongly that you take possession. There are roughly probably about 3,000 gold and silver dealers out there. And you don't really require too many licenses or anything. So somebody might be selling shoes last week and this week they're selling gold. I mean, something that's really important is, and you have to do your due diligence, how long have they been around? How much experience did they have? And I will tell you that what makes us different, I mean, I started at ITM in 2002. And truthfully, it's kind of, I don't want to insult anybody, but it's kind of a good old boy industry. But I came from I was a stockbroker and I was a banker. So that was my area that I was used to working in. And when I came into ITM trading, fortunately, they weren't afraid of what I brought to the table. And so everything that we do, again, I don't want you to take my word for it. You need to find a broker that actually will spend the time with you to help you not just understand how to do it, because that's actually pretty easy. You go in and you buy a coin, or you buy a sterling silver chopstick, which is what this is, or something like that, because both gold and silver in whatever form is still monetary at its base. But you want to make sure that you're dealing with somebody that has a lot of integrity. We've been around since 95. You can check in the Better Business Bureau is good. Reviews are good. I'm not saying everybody is 100%, but we always do try, and we try our best. And what makes us different, and this is really, it's not just how do you buy it, it's like, how do you utilize it, right?
Yeah.
Because if you're sitting on gold and silver, but you don't know how to, when or how it's time to convert it into the current monetary system to pay your taxes or to pay off the mortgage or whatever you need to do with it. And so that's actually what we do really different than anybody else, because nobody else that I know of, I mean, there are certainly people out there, but not in this industry, has actually studied currencies and currency life cycles. So before I came to ITM, I had created a strategy for myself based upon repeatable patterns. Because we've got over 4,800 times that currencies have gone away. And when something happens the same way every time, and we're doing the same thing, I don't know, maybe this time will be different, but it probably won't be.
Yeah.
The best shot is that it's going to be the same.
Yeah.
So it's actually pretty easy. What we do is we create a strategy, and if you're working with ITM, your strategy foundation is exactly the same as mine, but then it's tweaked because you're at a different stage in your life. You have different goals maybe than I have, different circumstances, different things to work with. So it's really, really customized, the strategy, And then it's really a lifetime relationship.
Yeah.
So, you watch the videos, you know when it's time to do this, you'll know when it's time to do that, etc.
Yeah.
And right now, without a doubt, it is time to get yourself as independent and self-sufficient as possible. So food, water, energy, security, barterability, wealth preservation, community, which is what we're doing, and shelter. Because these are the things that we need no matter what's happening in the economy to have a reasonable standard of living. And these are all the things that the strategy encompasses.
Yeah, definitely. Now, let me kind of ask a little bit more concrete scenario, just kind of throwing at you.
Good.
I'm really trying to use that of like inviting all these awesome guests to our show is so that I can really get a comprehensive like free consultation out of all these sessions.
Okay.
And I think my listener will probably learn some stuff from there too. Just kidding. So let's put a scenario together. Let's say someone who's kind of more like me, or maybe not has as much portfolio in real estate. Just folks who is making maybe 200K a year, have some stuff in the stock, majority is in 401k, have one or two rentals, real estate, single family homes. What would you say, kind of like how, when you look at that portfolio, how would you kind of structure that versus I'll give you a second persona over here later on, like versus that particular persona. So what are some of the stuff that you would suggest to me in terms of precious metal which to invest in? Because I know there's silver as well, there's precious, there's gold, there's bullion. I didn't even know what the different types of gold before I met you. And then there's like the collectibles and all that stuff. So how would I kind of set up my portfolio like that? Let's say I'm like mid 30s, like 35.
Okay.
Yeah.
So, I would ask you, do you have children that you want to educate?
Yes, let's say
You
we have two
you have some
kids, typically
children,
younger. Yeah.
etc. Okay. So first of all, we have a spreadsheet that I originally designed, but we've made it a whole lot better too. So we would lay everything out on this spreadsheet and we'd go, okay, now if you came to me and said, well, I want to make sure, let's say you have, just to make life easy, $1 million in your 401k. Okay. Yeah. Well, and if the dollar is going away, right, which it is, then what you want to do, that means that's going to zero or somewhere near zero, which is hard for people to comprehend, but 1 trillion times zero is still zero. Right. So what we're going to do, there's a formula based upon the fundamental value, which we didn't talk about yet. So I'll explain that in a second. But there's a formula that we use, and okay, how much do you need to protect? And so that's how much gold, based on your portfolios of fiat money assets, that you would need. So we'd calculate that out. We would also take a look at what is your current cost of living. And that's where the silver comes in, and also some of the gold, because of those property taxes, that we want to take a look at your cost of living, including all your property taxes. And then we have formulas to determine, okay, this is how much silver you need, this is how much gold you need. And because this is a global issue, my personal portfolio has that level of protection in it for 10 years to sustain my current standard of living. And it's actually, considering how severely undervalued both of these assets are, it's not as much as you would think. Yeah. And it's actually pretty amazing. So it's a gift that they've been suppressing the price. Yeah. We're going to take a look at whatever mortgages you have, any other fixed rate debt that you have. And again, using those formulas, we can determine how much gold and silver you are most likely to need through this whole entire scenario. Then beyond that, we look at your growth goals, right? So right now you own a couple of properties, but history tells us what happens to properties during the circumstances that we're in right now.
Mhm.
And I mean, this rapid run up, I mean, if you've been in property for a long time, you know that that's not normal for the prices to go up like
Right.
that quickly, right?
Mhm.
So, and what goes up like that must come down, and vice versa. So, when that happens, those that are not prepared to hold on to their holdings, there will be a lot of properties that come on the market. And it does a flip flop. So, right now, you got undervalued gold, overvalued real estate, and then that's going to flip flop.
Mhm.
And so, then history also shows us that, and I did a whole piece on this, but 25 ounces of gold or the equivalent would buy an entire city block in Berlin,
Ooh.
right? During
Yeah.
the Weimar Republic.
Yeah.
25 ounces of gold,
Wow.
right? So, again, you go back to your goals. Maybe you just have a couple of rental properties now. Well, look at all the building that's going on. A
Mm.
lot of that is securitized. In other words, turned into securities and sold. Wall Street sells it to the public, right?
Mm.
They don't care if property prices go down. They've got their money out.
Right.
You're the one that's sitting there holding the bag.
Right.
So if you protect not just that, but you put yourself in a position to take advantage of this wealth transfer mechanism, because that's
Mhm.
really what it is. Wealth never disappears. It just shifts location.
Right. Yeah. Absolutely. And then so to kind of distill it down, kind of get it a little bit more practical over here for some of the listener over here. Like for example, someone who's like in their 35 and you have kids and etc. There's a to Lynette's point. The first thing that she said is like, how much do you need? So I'm guessing that do you need part is really the minimal of what you need: a food, shelter, run over. For some people it may be 6 months, for some people it may be a year of what's living
Right.
on.
And
um
it also depends, can I just kind of add? It
yeah.
also depends, if you're 35 and you've got, a solid job that won't go away. I mean, frankly, I kept working all through the pandemic. I mean, it
Mhm.
didn't stop us at all from doing what we're doing. So if
Yeah.
you're in that kind of position, right, then
Mhm.
you don't need, because you need some level of cash as well outside of the system, not
Mhm.
in the banks, but outside of the system, you might not need as much. If you're older, right, then
Mhm.
you probably need longer.
Yeah.
But this is a discussion to
Yeah.
where your personal level of comfort is.
Yeah. And then safeties and all that. And then the second part where she was mentioned over there is what stuff cost. So I love that she's making that into two different distinct segment of the portfolio. What do you need and what it costs? Because what it costs and perhaps is maintaining your current lifestyle, or maybe a little bit below, or maybe a
But
little
better
bit
than if
above,
you
but
do
like whatever,
nothing,
right?
right?
Exactly. So that cost of living maybe include a mortgage if you want to hold on to your wealth vehicles and etc. You would need to continue to pay for that mortgage, but obviously it's negotiable, possibly negotiable.
Right.
Because you could have
And
just say, hey, I'm not gonna hold this house anymore, which I don't recommend anyone to do. um so then you don't necessarily need that mortgage, but in this case, if you want to hold the property, that's how much it would have cost.
right. And you want to be in a position to boom, pay it off. Right.
Mhm.
Now, if you own a lot of real estate and that
Mhm.
is your income,
Yeah.
then you need to replace that income or some portion of it, depending upon whatever your level of comfort is. So all of these things you would do with physical gold and physical silver.
Mhm.
And because it's really quite simple, the process to buy is simple. First, you want to define everything so you know what is
Mhm.
going to support your
It's
goals,
allocated. Yeah.
right?
Mhm.
But beyond that, then it's just, you wire in the funds, everything is purchased, and then it's all shipped to you. And then you do everything in reverse when it's time to liquidate,
Mhm.
right?
Yeah.
So, I mean,
Yeah.
that makes it easy. But
Yeah.
I don't want to gloss over fundamental value because how much, when I said, well, if they did it today, it'd be $13,500.
Mm.
Okay. because fiat money, the debt money that we have that we're, inflating away, right? That's fiat money. Gold is good money. Silver, this is the primary currency metal. Silver is the secondary currency metal. Okay. So the way that you get fundamental value, they're all forms of money, but when they do an overnight reset, like we see in Venezuela, they've done 3, Zimbabwe, there are a whole bunch of countries that have done that. What they do is they revalue the currency against the gold, and then that's when it expresses somewhere near its true fundamental value. So how do you get that number? Well, you know how to do it with real estate, right? Because historically, 10% return on your investment. So if you're only getting 4%, it might be a little overvalued. If you're getting 15%, wow, it's undervalued rock and roll. Right. So everything has that, and that's where a little bit of judgment is. You've got to take into consideration what is the most important function of this asset, and how has history valued that function. Right. So going back to the physical, to gold and silver, the most important function of gold is to hold your assets even over time. And that's exactly what it's done for 6,000 years. With fiat money, the goal is really to give you an invisible tax that you don't fight because it doesn't have to go through legislation, and for corporations to pay you less and less. But the way that money is created is by debt. So just to put it simply, I'm not going to get you to the penny. I'm not even going to try. I'll just get you close, right? Yeah. So you take all the debt that's been created, because that's a proxy for how much money has been created. And you divide it by the finite amount of gold that exists. You can use in-ground gold, above-ground gold, but gold is indestructible. So we can really, to be very accurate with how much gold there is, to 98%, and that's pretty good. So you just divide how much debt there is by how much gold there is, and that gets you somewhere around $13,500. And the more debt they grow, the higher that number goes. So in Venezuela, the first overnight revaluation, although this has been pretty consistent with the other two, was up over 3,500%.
Wow.
How many mortgage could you pay off? What might take you 10 ounces of gold to pay off now might take you a quarter of an ounce or a 20th of an ounce when that reset occurs. And that's part of the strategy.
Yeah, that's amazing. That's awesome, because I've actually never heard you talk about this before, or has anyone else made that analogy? And I think that's definitely very concrete over here. Yeah. And so now, can you kind of explain a little bit more on using a layman term per se to say, okay, I love you touched on fundamental primary goal for using certain assets, right? I think folks will know that they have some stuff in their portfolio to understand, okay, I will buy option. What is the purpose for option? Is so that I can grow exponentially, right? Really kind of like a little bit gambling a little bit on that.
I was going to say, it's a trading mechanism and it's a derivative.
Yes.
And I mean, there was a time when really that made a whole lot of sense. I'm a farmer. It's January. I'm going to sell my crop in September. I don't know what kind of year I'm going to have.
Yeah.
And so I'm going to buy those options to make sure that if I have a really bad year, it pays me what I need to survive another year.
Right.
But they've been turned in since the 90s. They've been turned into a speculative. Exactly.
Yeah.
That's not an investment.
But people who gamble, who has like the thought process that, oh, there may be more growth over there. And then, like there are dividend stock, and there are cash used for usually transactions, because the cash is like, you can use it now. I think that's really the way to kind of see it. And then now let's kind of talk about precious metal. So what do you see fundamentally silver, the pros and cons of holding silver, and why would you need a silver? And because someone would say, well, silver has more value, or has decreased the value, like the suppressed value
Oh, yeah.
right? So I'm just gonna buy a whole bunch of a silver. Now, what is the pros and cons for that?
That's a great question. So, first of all, the biggest con is how much space it takes to hold as much. This is roughly 1 ounce of silver. This is roughly 1 ounce of gold. I need a whole lot of these. So a lot of it is just this space. It's very unwieldy.
Mhm.
But it is perfect for day-to-day barterability. I
Mhm.
need to put a tank of gas in my car. I need to buy strawberries, right? So for day-to-day barterability, that's what I use silver for,
Mhm.
frankly, because these are smaller purchases,
Mhm.
right?
Yeah.
But when you're talking about, a way to carry a lot of wealth in a tiny package,
Mhm.
that's what gold does. And it's also, both of these are completely out of the system. So could silver go up percentage-wise more than gold in
Mhm.
this hyperinflationary event? To start with, yes, it could. I mean, silver gets used up in production, and the ETF, so Wall Street's version of silver, just to follow the spot market,
Mhm.
they had to change their prospectus because they can't go out and buy enough silver. But hey, it's only worth 24 bucks an ounce.
Mhm.
I mean, that's a joke, really.
Yeah.
But the challenge with thinking, well, I'll just go buy a whole bunch of silver. Again, you always have to go back to your goals, because let's say silver goes to 600 bucks an ounce, because that's where what the calculation comes out to at this point,
Mhm.
right? Well, you're going to convert it into dollars that you can't do anything with. So it doesn't really make a whole lot of sense. That's
Right.
more of a trading mentality, which is not the way I approach my precious metals portfolio.
Mm.
I have my goals. I need functionality. So for me, the functionality in silver, and I own both, I clearly own both, but they're to do different jobs,
Mhm.
right? It'd
Yeah.
be hard to buy a property with a whole bunch of silver. I mean, how
Yes.
many trucks do you have?
Right.
Whereas I can do it much easier with a small amount of gold.
Mhm.
And keep in mind too, it is gold against which they reset the currency, not silver.
Mm. Yeah.
So what we saw was, while that the difference between those two prices, like in Weimar, Germany, for example, did get narrow there for a minute, at
Mhm.
the end of the day, when the hyperinflation really kicked in, gold far surpassed the gains on silver.
Oh, silver. Yeah.
Okay, but you need both.
Right.
And even my sterling silver chopstick. I mean, I've accumulated so much sterling by going to yard sales over the years, etc. But remember, I said it's monetary at its base. If I needed to clip a piece of it, and I mean, it's not exactly perfect, it's not the best chopstick, I don't care. It's sterling silver.
It's
It's
still you.
92.5% pure. Rock and
Yeah.
roll hoochie coo. I buy all that I can. I don't care if I'm at an estate sale or I'm somewhere and I don't care if it's bent or broken or dinged or nobody wants it. Perfect.
It's the
I'll buy
concept.
it.
Yeah, absolutely.
Right.
And so then gold, now tell us a little bit more about, because you talked about collectible. You
Mm-hmm.
personally favor the collectible a lot. Now, I
Mm-hmm.
want to kind of, because I've heard it multiple times, but I want my audience to kind of also hear from you in terms of why collectible, and there's different of gold. What kind of gold should they buy? Kind of get into that a little bit more detail.
Absolutely.
Mm.
I'm going to go back to establishing your goals and what you needed to perform.
Mhm.
So there's no one way to do it. But I personally only buy collectible gold. That's not true for silver, but it is for gold, because I believe that desperate governments do desperate things. And this country and many other countries have a history of confiscation.
Mhm.
They've been robbing you your entire life. I find it really hard to believe that right at the end, when they're getting it, they're going to go, we got enough. No, they've spent it. They want everything. But what the guys that write the laws do is they make sure that those laws support themselves.
Mm.
So I was quite fortunate that I had my Uncle Al, who was a high-end antique dealer.
Hmm.
And he was my favorite uncle. We had a very nice relationship. And one day, my parents and I were at his house. And he goes, "Come here, I want to show you something." So we go in the back bedroom, and he had these two tall floor safes. And he opened the doors, and he said, "If anything should happen to me, Aunt Bertie will be well taken care of for the rest of her life because of what's in these safes." Now, I was 10 at the time. But hey, you make that statement, I'm turning around to look. And what I saw, I didn't really understand how much was in there, but
Hmm.
knowing what I know now, I would guess that he had at least 3,000 ounces of gold.
Wow.
Now, they were not slabbed like this because it was 1964,
Hmm.
but it was illegal to own more than 5 ounces of gold
Hmm.
in 1964. And here he had at least 3,000 ounces.
Right.
So, what I learned legally, because I also want the kind of gold that I can use in the normal marketplace to buy all of that property
Hmm.
when the time is right.
Right.
And, and so since I believe there's going to be a confiscation, and since this is the biggest bargain, gold itself is a huge bargain.
Hmm.
But when you look at the asset classes, this is the absolute biggest bargain.
Hmm.
And, I just pulled these two graphs for a piece that I'm running, tomorrow. So I pulled it on things that would be more like this, the gold coins that would be more like this. And what I see technically is we're coming to conclusion on a cup formation, which is an accumulation pattern and
Hmm.
a very powerful one. But when I pulled up the rarities, so the ones that there are even fewer of,
Hmm.
you've got a cup there, but at a much higher level. So you can see what the wealthy are doing for themselves.
Hmm.
Okay? I believe that you should do what the smartest person in the room on any given topic is doing for themselves. So I'm always looking at that kind of thing.
Hmm.
So, and it also kind of works like this. You go to, but you need a diversified portfolio. No matter what I'm saying here, even within precious metals, it needs to be diversified. But let's say we go to an auction
Hmm.
and there are 10 people at this auction and there's 10 coins on the table and everybody wants one. So wherever the bidding opens up, that's what they're going to pay and they'll
Hmm.
walk away happy. But you have one coin and everybody wants that. So now he or she who's willing to pay the most for that coin gets it, but you still have 9 other people that wanted it,
Hmm.
right? And there ain't no fever like gold fever, let me tell you. So, again, and the premiums on these coins they're not as low as I've recently seen them, but they're
Hmm.
still substantially below the historic norm. Where gold and silver physical are the biggest bargains, but even more than that, the collectible coins are, and you're not paying very big premium.
Hmm.
But
And then
it'll depend. I mean, it all depends.
yeah, and then kind of going back to that example, I think another example you made was like about how easy they're to travel with, and also going back to the truckloads of silver compared to a box of gold on transferability. Now, if that box of gold becomes collectible, so instead of one box, and maybe half box. So really, if the purpose was try to transfer to hide it somewhere, moving somewhere with them really mobily. So that's kind of like the purpose of holding the collectible. So perhaps for folks who's kind of building their portfolio, I'm just kind of making the conclusion here. If let me know if you disagree. It's like if you only have a certain amount of cash that's sitting on the side, perhaps you have to take care of what your needs are first, the preservation of wealth, or just the immediate usage of that. So perhaps like getting into silver a little bit more is a primary thing. But once you kind of go beyond that portfolio analysis and say, okay, there's like a bucket that you have enough cash sitting aside or enough other assets that you're going to transfer, for example, stocks and whatnot. Then you take care of your needs and what is caught, like what you needed to pay your regular bills. And then the leftovers now perhaps will be great to get into, I don't know, the common gold or maybe the collectible gold, maybe diversify between that. Is that kind of how I should be thinking about that? And then if you're really wealthy and really care about, or if you really care about mobility, then the collectible gold should definitely be part of the portfolio.
I think you can't really make like a blanket statement.
Mm,
What you always want to start with is what you're trying to accomplish. You
mhm,
want to protect this, you want to make sure you can sustain your standard of living, and you want to be in a position to take advantage of the wealth transfer.
mm,
And then beyond that, like for me, when I'm talking about the rarities, so this may or not be important to you,
mhm,
but I have children and grandchildren, so leaving a legacy or dynastic wealth is
mhm,
very important to me. So I can't say that I go to one place. I
mhm.
say that I look at the whole picture, and then based on the individual, I would probably, I mean, and again, it depends on if you have $1,000 to work with, well, this is what you're doing, you
Yeah,
know?
yeah,
But if you have, I don't know,
$1 million.
25, well, if
Yeah.
you have a million, then you're doing like everything,
Yeah.
really. And, dynastic wealth is wealth that lasts in families at least 300 years. And you can kind of think about the Queen of England,
Mm-hmm.
right? I mean, she gets tax money, so she gets that.
Yeah.
But what does she have? She has rare collectibles, she's got real estate, and she's got gold.
Right.
So
Yeah.
why not you?
Yeah. Yeah.
Right? Why
Yeah.
not? So it really does depend on what you're trying to accomplish. That
Mm-hmm.
always has to be where you start. Because
Yeah.
then you're going to build it, even if you can't do it all at once. Then once you lay all of that out, I mean,
Mm-hmm.
that's the importance of having a plan
Mm-hmm.
so that you're not just kind of going, well, ping here and ping there. It's like, okay, here's everything laid out. Now, what do we need to do? What's most important to you? And then you just kind of start filling those holes. And I wouldn't wait very long, to
Yeah.
be honest with you. I mean,
Yeah. Because I think when we talked the first time was like in February or so at the Rebel Capital.
right.
And at that point I checked the spot goat was at $1,700 or something. And then 2 months later, 1 month later, went up to 2,000. And then the newspaper talks about how it being historically high. But you and I know there's still more values to be had over there.
Lot.
And then moving forward from there, the stuff that we have discussed before months ago, about interest rate hike, depression, the reversion of the charts, like all that sort of stuff, it is kind of happening. So it's
And it's obvious now, right? I
right,
mean, you can
right.
see the things that we talked about in
Yes.
February are really unfolding now.
Yeah. Even stuff that we bought last year, taking some advices from the small groups folks that we are part of. We have bought rate caps on them, knowing interest rate is going to going up. And then we're getting paid on these insurance right now, right? Just having some predictability, preparing yourself, preparing your family, getting into the place. Obviously I'm not one that's super expert in this precious metal land, but even for me, for the longest time, I'm like, oh yeah, gold, whatever. Like, don't need to do too much of this. But now I'm pretty convinced and actively looking for investing in precious metal and etc. And I love Lynette's approach over here, which is like everything that kind of we teach over here in Easy FIU too, is like looking at your portfolio, look at your goals, what your investment goals are, what your lifestyle goals are, and then
Mhm.
deciding your investment strategy. So for sure, I will reach out to Lynette to make sure that she does a portfolio analysis for me, for our company over here as well. And then I think that's
You do that.
totally things to kind of look at if you are interested looking at purchase precious metal and etc. I think it would definitely be a good idea to reach out to Lynette. We're gonna put her contact information over here in the show notes as well, and also in the email that we'll be sending out for the folks who are consuming recording right now, to get in contact with her. and getting the first step correctly to making sure that we're doing the portfolio analysis.
Honestly, I mean, I do own real estate and stuff, but I'm all in. But then again, this is where I've lived my life. So I have a very high level of, and it's
Yeah,
flipping gold and silver, people.
right.
I mean, it's like, come on. We've
Yeah,
been taught to not think about this, right? Oh, what do you want that? But if you look at what the central bankers are doing, they're buying gold hand over fist
yeah,
because they know they're destroying the currency.
yeah.
And that's what the inflation is. It's showing you, and they liken back to the 1970s, right? If
Mhm.
you're reading all the headlines, oh, inflation hasn't been this high since 1981 or back in the 70s and blah blah blah.
Yeah.
Well, what was happening then? We were transitioning into a brand new system. What's
Uh-huh.
happening now? We're transitioning into a brand new system. But this is bigger than it
Yeah.
was in the 70s. And I was there. So I actually do. I was a teenager. So I
Yeah.
was old enough to, I didn't really comprehend everything, but I'm old enough to remember what that looked like.
Mhm.
And I have to tell you that this is like the fourth industrial revolution. This is a fourth revolution, and we're definitely going into digitized. And
Mhm.
because the only thing with central bank digital currencies, the only thing that I've been able to find so far to justify them creating that is debt. And
Mhm.
what that means is they have to burn off this massive amount of debt that they've accumulated so they can do it all over again. And
Yeah.
that's what the hyperinflation really enables. And you better have gold and silver because that's nothing else is going to protect you
Yeah.
as far as your wealth is concerned.
Yeah, because definitely we have some content coming up as well about quantitative tightening, and quantitative easing leads to quantitative tightening. So what that means in plain language over here is basically the Fed has make no news. It's not a secret because they put it into a lot of newspaper already. They're currently on a mission to make money disappear because they have printed a whole bunch of them before. So now it's time to kind of make them disappear, which is a method they use to control the inflation, or so they say. So in that manner,
And, and and honestly, we've been watching a number of countries like Mexico, and they're not the only ones, but raising rates, and it's still not having an impact on their inflation. So that's just a theory, and
mhm,
that's a demand side theory
mhm,
because what central banks have are interest rates to control it. They wanted to encourage real estate because that's 30% of the global GDP. That's a
mhm,
huge part of
mhm,
the economy. So lowering rates, well, that's one of the reasons why we saw the prices go up so
right,
much, right?
yeah,
But now they're going to raise the rates, and I'll say this: they have to do it for their credibility.
mhm,
But yeah, are they going to raise the rates 21.5% like
I'm
Paul
not sure.
Volcker did?
Yeah,
And no. And by
yeah,
the way, I think that was more about getting ramp room to lower the rates to stimulate the economy. So they're going to do it because they have to for their credibility,
mhm,
but you'll watch them do a big pivot. Because
yeah,
here's something super simple. There is only one way to fight inflation, and that's with deflation. That's
right,
why they're raising the rates.
yes.
But there's only one way to fight deflation, and that's with inflation.
Yes,
So this is not rocket science. It's actually pretty simple. So you get to the sidelines
yeah.
in an undervalued asset,
You hold your own currencies
you
essentially.
become your own central bank
Yeah,
because you can always convert this into any of the current currencies.
yeah.
Can't always
Um,
say that about currencies.
And we did have another question on this about gold ETF. I love this question because I know you're just gonna go to town on this one. Why buying gold ETF is worse than physical gold? It saves from storage and security costs.
Sure, it does. And if you don't hold it, you don't own it because a gold ETF or a silver ETF, all you own are shares in a trust. You have absolutely no access to the underlying physical. So it's just a share and it's designed to mimic the spot market, which is a manipulated market anyway.
Mhm.
You can see a premium in the physical market because that's a true supply and demand market. The Wall Street market is not. So if you go into stockcharts.com, this is cheap. I mean, this is free actually. Stockcharts.com, and you would put in GLD, and then you would put in, and you'd pull that graph up, and on the bottom you can go in and look at a perf chart. So this is a performance against the other. So you put in GLD, and then you put in $GOLD, and then you compare them, and you go all the way long, and what you will find is that GLD is actually a diminishing asset because they, in their prospectus, they say it, and they also show it in their 10Ks. They sell off parts of their gold holdings on a daily basis to pay the fees.
Mhm.
So if you do GLD or any of the gold, any of the ETFs, you don't own gold, you don't own silver.
You
You
own a
own-
piece of paper, right? Which is probably better than the fiat paper, but it's kind of like that indirect things, which there, anytime it's indirect, there may be some proportion that's put it in there, what would not over there, which is why, like, even in real estate, a lot of our investors gravitate towards a single asset or a portfolio. You know exactly what you're investing in.
Right.
So similar here with the gold as well.
Well, that, and you can only convert it into dollars that are going away.
Mhm.
Does not do
Yeah.
you any good.
Yes, definitely. Awesome. Last question I have is about storage. For people who owns metal, they already knows about storage, etc. What are some different options to store large amount of metals, precious metals, and some of the pros and cons? Yeah.
Well, there are some people, I'm not one of them, because I want my gold and silver close enough to me that I can get it when I need to. Now, obviously, I'm too visible. There are so many hidden places in your home. Before I was so visible, those little 2-inch kick plates underneath your kitchen cabinets or your bathroom that's dead space.
Mhm.
So I put in false floors. And, who's going to think, oh, they've got gold or silver
Yeah.
inside of their house? So,
Now they're gonna think that because you shared that.
yes, well, I hope enough people watch this. But,
Yeah.
but seriously, when I put together a little one sheet years ago on ideas to hold it,
Yeah.
I personally hold it in a private vault
Uh-huh.
because I don't really like bank vaults because they can declare a bank holiday. And
Right.
also, you are not allowed to hold cash or bullion gold, which is new stuff, in bank safe deposit box because it's classified as hoarding.
Mm-hmm.
If you get it out of their possession, you're hoarding. If you leave it in the bank's possession, because that's really just a loan to the bank,
Yeah.
well, then you're saving.
Yeah.
Doesn't make sense to
I
me.
mean, during COVID, I couldn't even wire money that's like rightfully in my account. So this kind of gives you some thoughts in terms of holding your gold in a 9 to 5 bank account, which if you're working, you don't have really time to get in there and get this out of there
Right.
if you needed to. Yeah.
Now, there are some people that hold it in offshore storage,
Mm-hmm.
but in a crisis, which is what you're buying this for, I don't know that you'd be able to get it, just like you indicated on the wiring. But that's only your perception that that's your money in the bank, by the way.
Yes.
Legally, you're loaning it to the bank.
Yeah.
That's why they can bail it in.
Right.
And that's
Yeah.
why you get a little 15 cent. I got 15 cents interest on
Yeah.
my checking account. I have a lot of cash in there because I run a business, so I have to keep more cash than I would if I didn't
Yeah.
run a business. But hey, that shows you loaned them the money, they're paying you interest on it. And
Yeah.
therefore everything is in jeopardy. So it really does depend on what the portfolio looks like
Mm-hmm.
because you can hold it in a diversified manner too. I mean, what are you going to need first? You're going to need your barterable portfolio first,
Mm-hmm.
right? So that you really want it close enough for, like, I can walk to the vault. If I needed to walk to the vault, I can walk to the vault. That's easy.
Yeah.
And so you might want to think about holding it in several different places, but I'd still just stay as private as possible
Mhm.
because nobody needs to know.
Right.
And your home, really, there are some great, easy hiding
Yeah.
places. Not not in the freezer because that's where they'll look, you know. But there are
Never
a
thought
lot.
about freezer, but okay.
Uh,
Yes.
no, I think there's like a list of where robbers look first, like the
Huh.
underpants drawer, the freezer.
Huh.
Don't hold
Interesting.
it in the undie drawer. That's
Yeah.
not a good place.
Awesome. Awesome. Well, thank you so much, Lynette, for your time here. I could ask you forever about like all these questions that we have. I think that's pretty much to the end of the questions over here. Oh, actually, more people ask more questions. If you have like 2 more minutes over here, I'll ask them.
Sure, go ahead.
What if you don't have a home or apartment to store it in? I think we talked about
The
private vault.
private vaults,
These are vaults you can access 24 hours, and it's not
it
a
kind of
government owned
depends,
entity.
but it's
Okay.
not it kind of depends. So some you can access 24 hours, some you can't, but they're not associated with any government entities, and they usually hold a lot of different things. So
Yeah.
I feel safer there.
And another question is about the IRA money to buy gold. So I know you're gonna go to town on that one too. Uh, why IRA money to buy gold? Because there's taxation coming with the gold as well. That is nor here nor near the here nor there. Because it's a public forum, so I'm not going to talk about like, how we're going to deal with that. But basically, a lot of people have said, well, it's a great idea to use IRA money to buy gold because then you can defer the tax or avoid the tax
That's
in
what
that
you
case.
can't avoid it,
Yeah,
but you can defer it.
defer it, the
And,
tax.
IRAs came into being in the 70s as they were transferring risk from the corporations to the individuals.
Mm-hmm.
And when they set up these programs, and they seriously, I mean, you can read the documents. This is not my opinion, this is in the documents.
Mm-hmm.
They set things up to, it's called perception management. So in the IRA, if you have $100,000 in there, right?
Yeah.
People look at it and go, look, I have $100,000 in there.
Mm-hmm.
However, they don't want to pay the taxes, so they postpone it. Part of the question that you have to ask yourself is, do I think taxes will go down?
Mm-hmm.
Do I think they will stay the same, or do I think they're going to go up?
Yeah.
Okay, so that's number one. And number two, this is so undervalued. If it goes in at just, $2,000 an ounce, but you take it out at $13,000 an ounce, that's a much bigger taxable hit, right?
Yeah.
There are ways in the strategy that we can recoup any taxes, any fees, any losses. There's all those formulas that are built in to help us offset that.
Mm-hmm.
But if you don't hold it, you don't own it.
Yeah.
And the only thing you can do in an IRA is bullion gold. That's another reason why, well, what kind of gold?
Mm-hmm.
Well, if you can hold it in an IRA, I don't want it.
Yeah.
So I don't buy that because I personally think we're going to see an overt confiscation here.
Mm-hmm.
There's so many manipulating the price is a covert confiscation, keeping you away from it,
Mm-hmm.
right? So I think we'll see an overt, and you can't do collectibles in there, though. I don't know why. They're all standard
Mm-hmm.
weight and all
Yeah.
of that, but they're in a different classification. That's where I want to be.
Yeah, and then a couple of the things to just kind of know is remember the rules that they're trying to pass last year. And then we have made, not we, but like collectively in real estate, we have kind of put a lot of a fight over. The Congress had a rule that they wanted to pass. This is specifically to regulate the type of investment that you can invest through your IRA in the 401k account. How does that matter to the gold stuff? Because I don't think that was on there. Well, here's another thing about the IRA and the retirement fund in general, especially folks who are real estate professional. You kind of had this a little bit of a chance to slowly getting that money out of there. Yeah, you got to maybe pay 10% the penalty, but there's a lot of deferring of taxes with depreciation, and there's a whole strategy on that that you can do to get that money out there so it's working harder for you and more freer for you. Because part of the retirement fund, it is a regulated account. So therefore, when you're stashing your wealth in there, the government had a lot more control over there because they can just simply try to pass a rule like what they tried to do last year, that basically telling you that you can no longer invest in alternative investment. That's notes, real estate, all that sort of stuff. Now, if they limit you to only mutual funds, that money is somewhat limited in its ability. So that's just my other soapbox, wanted to kind of mention over here.
But
And
you're
this,
100% right.
yeah,
It's easy to change the rules. They can anticipate how much tax they can generate from you. They can change that.
yeah.
So, yeah, you're 100% right.
Yeah, so that kind of goes applying for the same like gold and etc. If your goal was to preserve wealth, stashing money essentially, then do you really want to stash money in a very visible way? That's the question I have there. Okay, last one. This is kind of funny. So I'm gonna end it with that note. If your house catch on fire, I guess gold and silver just melts. It doesn't evaporate. So yeah.
Correct. That's right, because gold is indestructible. So, yeah, if you have it in your house and your house burns,
Yes.
it'll
Good
melt,
luck. It will melt,
but
but
you
you
can
still
put
have
it in
it.
a fireproof safe.
Yes.
They have floor safes that are fireproof. They have safes that are fireproof. So
Yeah.
that's what.
I love that one. It's kind of funny one. Awesome. Well, thank you so much, Lynette. How does people kind of find out about you? And for these folks who is the consumer recording, it's already on the show notes down below. Yeah.
Right. Well, I have the YouTube channel, and I'm constantly publishing on that. And so you can search my name, Lynette Zang, or ITM Trading, and that will come up. Or you can call us at 888-696-4653, or you can email us.
Yeah.
So we're easy to get a hold of, and we like human contact.
Yeah.
By the
Good.
way.
So no automated answer machines over there.
No, no. You'll get real people and you'll have a real relationship, because that's our commitment. We want to get you through this and out the other side in better shape than when you started.
Yeah, that's awesome. Well, thank you so much, Lynette, for your time today. And this wraps up our this month webinar on silver and gold, precious metal purchasing. Hopefully, you have thought about the strategy a little bit more and take action on this.
Please, it's time to take action,
as
Elisa.
soon as possible. Thank you.